CoreWeave revenue doubles to $2.575 billion. The revenue scale-up has not translated into better margins because cash burn doubled in tandem, keeping losses at 24% of revenue. This contrarian signal suggests the business model depends on continuous capital raises rather than self-sustaining growth. Expect this to push CoreWeave toward longer-term GPU leases with AI labs by mid-next year to lock in utilization and stabilize costs. Customers locked into those deals will then face less flexibility when newer chips arrive from NVIDIA. Gemini app reaches 1 billion monthly users. Owning the chips through the consumer app gave Google an unmatched speed advantage in rolling out updates. Rivals without that integration will struggle to match the engagement velocity. This forces OpenAI to either license more device-level access from Microsoft or build its own hardware partnerships within the next year to close the distribution gap. Once that happens, expect API margin pressure to rise sharply as usage shifts toward mobile defaults instead of web interfaces. Kalshi annualized revenue tops $4 billion. The rapid doubling in just 2 months tracks directly to World Cup betting volume rather than broad platform growth. The $40 billion valuation assumes those spikes continue without annual repetition. That concentration creates volatility in the run rate that public market investors will scrutinize. This pushes Kalshi to diversify into non-sports contracts ahead of any IPO filing next year or risk multiple compression when volumes normalize. Traditional operators have incentive to copy the model before exclusive rights lock. OnlyFans investor plans creator financial products. Architects move into creator-specific loans and banking products bets that earnings on the platform will remain stable despite rising AI content. The timing suggests they see creator finance as the moat against AI substitution. This forces OnlyFans to either increase its revenue share cut or launch its own banking features to keep top talent from migrating to competitors like Patreon. Banks will likely partner only with top earners to limit exposure from AI income volatility ahead. Anton Levy raises $1.1 billion for knee fund. Levy's track record at General Atlantic already steered 3 portfolio companies past $10 billion valuations. That same Rolodex now powers Layer Global's first close. The contrarian angle sits in the deployment pace. Most new funds sit on dry powder for 24 months, yet Levy's mandate targets immediate Series C checks in vertical SaaS. Watch Series B lead investors lose leverage when founders secure a single anchor from Layer before shopping the round, shifting term negotiations by 6 months. Manus AI returns to independent operations. Meta's aborted purchase now leaves the team rebuilding distribution channels from scratch rather than inheriting enterprise sales reach. That independence carries a 6-month delay on large customer pilots already in discussion. Expect Anthropic to court the same engineering talent that stayed through the talks, betting the standalone path signals weaker backing overall. Founders at similar agent startups gain a cautionary template when weighing acquirer term sheets that include easy reversal clauses. Departure. Lightcap built the operating backbone that turned research prototypes into revenue lines rises another 30%, yet margin pressure mounts once enterprise SLAs demand dedicated support teams that no longer report to one operator. Rivals like Anthropic now face a faster-moving target on pricing parity. The machine runs without him, yet customer friction points shift downstream. Ex-Alibaba researcher launches Pragmatic Labs. Junyoung Lin's linguistics focus reframes agent design around coordination language rather than sensor fusion alone. Tencent and HSG Capital now backs a team that can ship hybrid agents without the usual robotics to software translation layer. Within 12 months, Pragmatic's approach pressures Figure and Boston Dynamics to embed comparable language models or watch their physical agents lag on task generalization. The pipeline from research papers to deployed agents shortens when the founder already bridges both domains. Cognition AI eyes $40 billion valuation. $40 billion is the number floating around, but the real pressure lands on how quickly their AI coding agents convert to paid seats. If adoption stalls below 20% of target enterprises by next summer, the next round resets at half the price. That forces every competing model shop to either slash inference costs or watch their own mid-market pilots evaporate. Smaller teams already testing the agents still report needing heavy human oversight, which undercuts the core productivity pitch. Neros raises $250 million at $2.5 billion valuation. The real shift starts when defense ministries realize FPV systems let them skip the multi-year pilot training pipelines entirely. That lowers the barrier for smaller countries to establish credible territorial deterrence without massive air forces. Traditional contractors now face pressure to spin up competing low-cost drone lines fast or watch their high-margin manned platform deals get cut from next year's budgets. Sequoia's bet here hinges on that procurement change happening before regulatory pushback on autonomous weapons solidifies across NATO members. Accel raises $3.5 billion for AI investments. Most of the capital targets early AI teams outside the usual US corridors. That spreads engineering talent across new hubs in Europe and Asia, which raises acquisition prices for US incumbents looking to buy rather than build their own models. Expect the average seed round size in those regions to jump 30% within 18 months as local valuations catch up. US firms scouting talent will have to match those new local offers or lose the best teams before Series A. Yulu raises $93 million for e-bike fleet, reaching 150 crore in annual revenue before taking outside capital, flips the usual startup script on its head. The new money now goes straight into fleet expansion rather than proving demand, which means Yulu can hit the 200,000 bike target with far less dilution than peers who raised earlier. Competitors still burning cash on user acquisition will face tighter margins once this scaled operation undercuts their per-ride pricing. Expect 2 or 3 smaller players to enter consolidation talks by next year. Zetwerk prepares $400 million India IPO. Fundraising size takes center stage in coverage, yet the 12,000 crore order book already gives Zetwerk leverage most pre-IPO companies only dream about. That visibility lets the company dictate terms rather than chase them. Competitors preparing their own listings will have to match this level of backlog disclosure or accept lower multiples from the same investors. This forces faster filings across the board before valuations adjust to the new standard. Hon Hai profit beats on AI hardware demand. The profit beat masks a deeper shift in how contract manufacturers allocate capital toward high-margin AI assembly. Hon Hai's position with NVIDIA gives it an early read on demand signals that others receive later. This forces Pegatron and other assembly rivals to either match AI server investments or watch their enterprise hardware share erode over the coming quarters. Capacity decisions made now will determine who captures the next wave of orders once demand stabilizes. Meta to open source Muse Spark 1.2 model. The timing suggests Meta prioritizes ecosystem control over proprietary edges. Releasing weights at flagship scale gives Chinese labs a ready teacher model they can iterate on immediately, while the accompanying small model lowers the barrier for on-device experimentation. This forces closed labs like Anthropic to either drop prices on their APIs or double down on enterprise-only features that open weights cannot easily replicate. Labs that stay closed will see their fine-tuning customers migrate to the open stack within 2 quarters. Joby Aviation acquires Resonant Sciences for $500 million. The $500 million check buys Joby more than stealth technology. It delivers an immediate defense revenue line that commercial eVTOL timelines cannot match. Rivals focused solely on passenger aircraft now confront a competitor with 2 distinct cash flows, one of which already clears $100 million annually. This dual structure will shape how regulators view air taxi safety certifications over the next 18 months. Expect Archer and Lilium to explore similar defense tie-ups before their next funding rounds close.